Welcome to Décryptage on Africa 24 English. In this edition, we take a closer look at Africa's economic resilience and the path towards sustainable growth. As the IMF projects a 4% rebound in 2025, the continent continues to grapple with mounting debt, financing gaps, and the urgent need for transformative investment. Joining us to unpack these critical issues is Mr. Zemedeh Negatu, Global Chairman at the Fairfax Africa Fund, a leading investment firm championing large-scale infrastructure and sustainable growth across the continent. Mr. Zemedeh Negatu, we are delighted to have you on Africa 24 English.
Thank you for having me.
Africa's growth outlook remains resilient, with the IMF projecting a 4% rebound in 2025, yet the continent still faces a combined external debt stock surpassing $1 trillion. How do you believe Africa can balance the urgent need for development financing with long-term debt sustainability?
Right. These are very good questions, fundamental questions. It gets asked a lot these days in Africa. So let me put this in context. As you indicated, the IMF is forecasting around 4.4% GDP growth average for Africa. And then in certain countries, actually, it's much higher than that. For example, if you look at the 5 largest economies in sub-Saharan Africa, the fastest growing is actually Ethiopia. It's close to 7.3, 7.4%. Kenya at around 5%. And Nigeria around 4%. But what is really surprising, and this drags down the African average, is South Africa. It's grown by less than 1%. The largest, most advanced economy in Africa is underperforming. So that when we talk about averages, that's why I say I need to put in context for what does 4.4%. You can imagine if South Africa can grow at an Ethiopia level, 7.5%, that 4.4 you talked about could be 5.5 or even 6. So I think averages need to be put in context. But it's still encouraging, that it's the continent which went through some rough times, especially during the pandemic. Obviously, we wouldn't even be talking about the bad old days of the 80s and the 90s when these were lost decades for Africa. It's starting to improve. Is it sufficient? No. Let me give you a data. For poverty to be eliminated or reduced significantly, a country has to go an average about 7.5% per year. So 4.4 means we'll be hard-pressed, Africa will be hard-pressed to reduce, let alone eliminate poverty in the near future. So that also needs to be taken into context. But overall, the improvement's good, especially with the number when I saw about Nigeria, a country we follow very closely. I think it's starting to turn around. The policies of President Tinubu is starting to deliver results, despite some challenges, especially after they devalued the currency. They went through some really tough times, but I think they've built up reserves, and hopefully in the next few years, the reforms will be fully embedded. So again, coming back to the 4.4, if Nigeria can grow at an Ethiopia level, because Ethiopia is like amongst the 5 largest, including Nigeria, then the Africa's overall. The reason I keep saying Africa needs to grow, or the bigger economies need to grow, is if they grow, they pull the others with them. And we've seen this in other parts of the world, like in Asia and China. When China grew, it became prosperous. The rest of Southeast Asia, and obviously ultimately the world prospered. Now, the specific question about debt, right? I think that was the gist of it. You said about $1 trillion. I don't know what the exact figure is, but Africa's debt is substantial. And in some cases, it's very challenging to sustain. In the past, say 20 years ago, there was what's called the Paris Club, where debts were written off from many African countries. That helped for a while. But I think a fundamental restructuring of the debt system globally, as it relates to Africa, needs to be brought to the table. A lot of these debts, even though many of them were written off, are still legacy debts, commercial debts that African governments in the past should not have borrowed, or should have thought about it before they borrowed at very high interest rates. Okay, so some of it is restructuring. The other problem is, because Africa is primarily a commodity exporting continent, as opposed to a value addition, during the boom years, there's huge borrowing, but without infrastructure, structural transformation of the economies. And then as it happens, commodities, it's a cyclical thing, and when it drops, and we saw that the last 4 or 5 years in certain countries, then the debt they accumulated during the boom years thinking that they would last come due, and they can't pay it because prices have dropped. So Africa needs to refocus. I know there's a lot of talk, some initiatives about moving up to the value chain so that we can have a sustainable growth, not only to service the debt, but to transform the lives of Africans. But it hasn't really been as what is expected. So hopefully, going forward, I know a number of African countries are rethinking their strategy of how to leverage that enormous resource that comes out of the ground. Why are we exporting raw and importing processed of our own products, especially with things like lithium, which we now all use for our cell phones, to EVs? Countries that produce this are like DRC and others are saying, we want to smelter it, we want to value add beneficiations right here in Africa. So hopefully when that happens, but it's a broader question about debt, but it needs a careful attention and review. The other component is the big development, DFIs, development financial institutions like the World Bank, the IMF, also have to help out African governments who are doing well, who have good strategies, ability to execute, building institutions, help them overcome these what I call liquidity challenges. Short-term liquidity challenges could be 2 years, 3 years, 4 years, so that they're on a sustainable path. We can't pretend. The world has changed, by the way. This year, since Donald Trump was president, became president in January, he's basically telling the world, we need to rethink how we operate. We can't continue the old. I know he's talking about the United States, rightly so. He's the president, but he's, as you see, he's changing the mindsets in Africa, for example, because this relates to debt and all. Investment, no debt. The approach that the administration is taking, for example, they completely dismantled USAID, which was a big donor, a big aid agency operating across Africa. But if you ask people on the ground over the last 50 years, hundreds of billions, maybe $1 trillion plus in aid money from the United States coming to Africa, what did we do with it? Did it really deliver? There's a lot of talk that maybe 80-90% of it is actually still remaining where the donors are. So President Trump came in and said, no, we want to rethink, okay? Investment and trade, not aid. Again, when we come to debt, maybe the debt sustainability will be encompassed in this new framework. Hopefully they'll be written off, arranged over a longer term period, haircuts as we call it, taking a discount. That might help, but new rethinking is needed, not just for the debt side of it, but I said for the economic growth as well.
Thank you, but before talking about Fairfax Africa Fund, let's talk about Africa's participation and FII mind. Right. How do you think this platform? Fairfax Africa Fund has positioned itself as a catalyst for large-scale infrastructure investment. In your view, what types of partnerships or financial instruments should African countries prioritize to attract transformative rather than extractive capital? Right.
So, as you know, FI, this is the 9th year. I've been participating since the beginning, actually. It started right here in Riyadh, and I've seen it grow to what it is today. Thousands of people attending, very high quality attendance. The network and opportunity is very significant. Are liquid. They have excess capital that they can export, meaning to invest. And they've started to do that. If you look at their investments, the Saudis, the Emiratis, the Qataris into Africa is over $100 billion. Okay? If you go back 10 years ago, it was a fraction of that. So FII, which as you know is powered by PIF, the Saudi Sovereign Wealth Fund, is in a position, one, to create awareness about the opportunities, the investment opportunities in Africa. Okay, the significant opportunity, because one of the challenges we face in Africa in attracting investment is the perception of risk. Whatever little exposure Africa gets in the rest of the world, especially in the Western world, is negative. So I think what FI is doing is reshaping thinking, starting obviously with this part of the world, but also because you know they have regional FIIs. They have them in the Americas. Last year I attended the one in Rio in Brazil. There was one obviously in Miami for the US, for North America. We have one coming up in the end of this month in November in Asia, in Tokyo. So FII is specifically for Africa And especially since Richard Atias knows Africa very well. I mean, I used to speak at his conference called the New York Forum, which, if you remember back then, it was specifically about Africa. So Richard leading it and creating this awareness first, and secondly, a vehicle for investments into Africa. I mean, PIF is $1 trillion sovereign wealth fund. Next door in UAE, they're even much bigger, and the same in Qatar. So the value of FII is on two platforms: creating awareness about what's going on in Africa in a realistic, positive way, but also creating the connections. As you saw, there are a number of African heads of states here who are pitching the countries as attractive investment destinations. Many African countries don't get this opportunity in large platforms like this. By the way, this is probably the largest investment gathering, business gathering anywhere in the world during the year, because I go to a lot of them, I speak at a lot of them. The World Economic Forum is about 3,000. I hear here it's more than 5,000 people. So this is the beautiful part of FII, okay? They're leveraging technology, they're leveraging their power to convene to create awareness. In fact, I'm currently lobbying for FII to hold this first regional conference summit in Africa next year. I've even posted it on my Twitter page. So hopefully, I think it will happen. But even them coming here is a big plus for Africa.
In a world shifting toward green transition, Africa contributes less than 4% of global emissions, yet receives under 12% of climate finance. What role should private investment play in bridging this gap and unlocking Africa's green industrial potential?
So the key word there is partnerships. And in fact, there were three panels yesterday with some big multinational companies and big wealthy sovereign wealth funds talking about the need for partnership. Even in highly developed, wealthy countries, partnerships are key. So specifically for Africa and Fairfax, our firm, and also the new investment bank we've set up now called CBE Capital. What we try to do is, first of all, the team that we have is globally experienced, so they understand what it takes to convince international investors to come invest in Africa. So we talk the talk. We've lived there. Many of us, like me, we grew up in the United States, but we're also from Africa. So the linkages, understanding what it takes for both sides to do business is part of what we do. We raise capital from around the world to invest in Africa, mostly equity. Very little debt, but most of what we raise is equity. And as you indicated, our targets will be manufacturing, a natural resource, but the value addition side of it. And then more importantly, very recently, with our partners in Brazil, a very large Brazilian investment bank based in Sao Paulo, we've established a $500 million private equity fund for investments exclusively in African agriculture. $500 million. So the first $500 million is designed for six East African countries, Kenya, Tanzania, Zambia, Ethiopia, Rwanda, and others. But the next $500 billion will also include West Africa, okay? But our focus, so this is why we raise money from large institutional investors, but we bring in the expertise on the agriculture side in particular, expertise, for example, from Brazil, which, as you know, Brazil is an agro powerhouse. So that's why when we talk about partnership, you actually framed it right. You need partners because each side brings something unique to the table. It's not just financing, it's knowledge, know-how, understanding of local markets, and creating local partners in Africa so that they have equity in these deals. It's not just foreign investors coming in and doing the deals, but local Africans who may lack the capital, but have the knowledge, the know-how, the expertise. So partnership is a key driver. And for us, we've invested in fintechs, manufacturing, infrastructure projects, transport logistics. We've done a lot of, from the investment banking side, we've done a lot of airlines in Africa. Actually, by last count, we've done 14 of them. It's a tough business for airlines in Africa, but for example, I led the team many years ago, started, I'm very proud to say, the most successful startup airline in Africa, which is based in Togo, called A-Sky. So we raised the capital, the financing together with a very smart entrepreneur from Togo. His name is John Doe. He's also the founder of the biggest Pan-African bank called EcoBank. So he and I, 13, 14 years ago, we did the road shows, and today, for example, A-Sky, partnership with, for example, Ethiopian Airlines, again, coming back to the theme of partnership, is today the most successful startup airline since many African countries became independent, okay? So those are the kinds of things that we do. We're very proud of what we do.
You took part in the 9th edition of the Future Investment Initiative in Riyadh, capital city of Saudi Arabia. How important is this platform for Africa?
And a very good point, because much of Africa is green, clean, renewable. I mean, I'm originally from Ethiopia, so 99% of Ethiopia's energy is renewable, most of it from hydro. You go to any African country, Africans do not mess up the climate, but they get penalized, right? The way the global climate structure is set up. So you're absolutely right. But my concern about the question you asked, though, is what can the private sector do? It can't just be the private sector. In fact, the private sector could be the executor, but it really needs to come from the governments and big institutions who have the resources, the financial resources, the political capacity to make these things happen. As you know, right now, in the United States, the new administration has de-emphasized climate change as an issue, okay? Europe is still proceeding, and even in Asia and China and all, they're promoting climate change as an issue and investing in that. But in the United States, it's being de-emphasized, okay? We'll see how it goes. That being what it is, for the private sector, I think we create PPPs, public partnerships, with governments and institutions, where we help execute what they think, but we also provide thought leadership. This is what we see, because we are operators, we're on the ground, right? We see what is happening, and we can help structure the financings in a very sophisticated way. We also can be catalysts, lobbyists in the developed world. When I say lobbyists, in a technical, professional way, to show why it is in the best interest of the developed economies to support clean, green energy in Africa, including, as you said, Africa only contributes 4%, but it only receives 12%, okay? There's lots of promises. If you go to those COP meetings all the time, the promises, the commitments are on paper. What we now need to do is make the paper come alive. You go to, so that's why perhaps the private sector, because of the access that we have and our ability to show results, we can use our connections, our networks, our ability to deliver for these promises to come alive. But it's a very hard process.
With Africa's startup ecosystem attracting over $4 billion in venture capital in 2024, how can African investors and governments ensure these funds scale beyond fintech to sectors that drive real structural change, such as manufacturing, logistics, and healthcare?
Two ways of approaching it. You're absolutely right. I think $4 billion is encouraging. Africa needs more, but we used to be at a time when there was just a few $100 million that are being invested in by venture capital for startups and all that. I suggest the approach would be, one would be VC funding the last couple of years around the world was down. Okay, so that had a spillover effect, but I think it's starting to pick up again this year. So, okay. But what happened in the beginning, and this happens in a lot of industries. Right now we see in AI, trillions of dollars are going to AI. That's how investors think. They're looking at the wave, they go where the money is. In the case of Africa, and including us, the first investment we did was in fintech, 12 years ago. Fintech, because that was where we think things will go. We saw companies like M-Pesa and Kenya doing very successful. We said others starting up. But that wave is kind of slowing down because fintech is now nearing a certain level of maturity. It's not as high returning as it used to be, rightly so, okay? So, the $4 billion, we need to work on it to increase it, but it's doable. Here's the challenge I mentioned to you earlier. The perception of risk is deterring investors, whether it's in private equity or in venture capital. So the first thing we need to do is change the perception and show the world. Earlier, you were asking me what kind of FII do. What can the media do to help with that regard? A lot of work in that space will help de-risk it for investors, because the perception of risk, I'm telling you, I see this all the time. In my previous firm, when I was the managing partner at Ernst & Young, we used to have this very beautiful report we published every year called the Africa Attractiveness Survey. Okay, and my team and I, we used to contribute to the overall by country. One year, I remember, and this is still a fact, we interviewed investors who are on the ground in Africa, who've done business in Africa, and then we interviewed others who only know about Africa from the media. They've never been there, or at least the most they've done is maybe come and visit one or two countries as tourists on a safari and go back. Here's the interesting thing. The result, when we asked them, what is your perception of risk in Africa, of doing business in Africa, the ones on the ground were overwhelmingly positive. Overwhelmingly positive. Whereas the others, who we're trying to attract with big dollars that they have, they were just the opposite. They were overwhelmingly negative. So the perception of risk needs to be addressed. So through media, through education, sustained campaigns, coming to places like FII and telling the story of Africa. It's not to suggest everything is rosy, okay? There are challenges. This is where the Africans come into play. Make it easy to do business. What we call the ease of doing business, that doesn't belong to the foreign investors. That's the responsibility of local governments, okay? So make it easy for Africans, for foreigners to come and invest. But not just for foreigners. Make it easy for Africans. I can tell you, as an investor, if the locals are not investing in a country, I would not, me as a foreign investor, would be very reluctant. I mean, that's the first rule. So make it easy for the locals, for the country, people for that particular country, the ease of doing business. Make it easy, okay? But then the foreign capital will flow. I mean, this is just a logical thing. I spent many years in Latin America. I've seen this. I've seen this in Africa. I've seen around the world. So ease of doing business, the rule of law in terms of businesses, how it's governed, predictability of policies and procedures, all the things that investors expect, we have to have it in place. Otherwise, we can always complain about not enough is coming to Africa. It takes two. The investors need to be educated. They need to be aware of the real, especially now. I tell you, geopolitics is in Africa's favor right now. Without lithium, we can't have cell phones. Without lithium, all these EVs will just be parked as toys, right? Where does that come from? From Africa, right? So understand what geopolitics is. So when you want to attract, last year, Africa attracted about $95 billion of FDI, excluding the VC side of it, right? So if you look at it, there's about 35 billion, one-off big investment in Egypt. But even if you take that out, it's about $60 billion, okay? Now, compared to previous years, it has increased. But it's less than 5% of global FDI. So I go back to my original point. De-risk it for investors from a perception risk, and de-risk it for investors from a practical on-the-ground level, making it easy to invest. Because capital flows where it's most wanted, most welcomed. And there's plenty of countries around the world that is offering investors. If you go to a pitch by any country, they all at some point they all start sounding alike, where they're like the best country on earth and all that. But investors have seen that. They say, the Africa Rising narrative, we sold it a lot. Now people are saying, okay, show me the money, show me the details. So I think when we talk about VC, beyond fintech, okay, I think it's critical for Africans to pitch themselves as alternatives for other. Manufacturing in Africa is doable if you know what you're doing, if the operating environment is good. I'm the chairman of a big European manufacturer that manufactures clothing. And we currently have 1,500 employees. The factory is in Ethiopia, okay? It's a big fashion house, beautiful, well-known brand. I chair that company for the Ethiopian business, which is essentially the African business we have now. So what we found is we structured it in such a way that energy in Ethiopia is dirt cheap. It's one of the cheapest in the world, which is key for manufacturing. Labor availability is key for large-scale manufacturing. The transport logistics, all these elements were in Ethiopia to attract a big multinational like us. And we can replicate this in countries in West Africa and East Africa and all this. But Africans have to get it right as well to understand what investors. Do I want to go and set up shop in Asia for manufacturing, or do I want to do it in Africa? These are the kinds of decisions companies make all the time. If it's easy to do it in China or in Bangladesh or Vietnam, they'll go there. So we also, as Africans, have a responsibility to make it easy for investors to come and invest. But the upside is very significant.
That was Mr. Zemedeh Negatu, Global Chairman of the Fairfax Africa Fund, sharing his vision for sustainable investment and growth across Africa.
Thank you for inviting me.
Thank you for watching this edition of Décryptage. Stay tuned for more insightful programs coming right here on Africa 24 English.